What's up everyone, welcome to Stockton. It's a pleasure to meet all of you. On this channel, we talk about stocks before they start blowing up, say goodbye to chasing stocks at all-time highs, and say hello to making some money. So if this sounds like something you want to take advantage of, then hit that beautiful subscribe button and like the video. Now let's get to it. Before we get into the video, I have to say that I'm not a financial advisor. Anything I say is just my opinion and is for entertainment purposes only. Having said that, if I'm talking about a company, I'll let you know whether I'm personally going to invest in it or not towards the end of the video. But you should always do your own due diligence, so with that out of the way, let's get started.
Hi guys, today I want to talk about what's been happening in the stock market world in the last few days. I'll explain what I think is really going on and how we can take advantage of this situation. So, for the first time in history, dumb money, that is retail investors, or more specifically, people on Wallstreetbets Reddit page have been able to short squeeze smart money, that is hedge funds like Melvin Capital and Citron Research. This is a truly remarkable situation. Wallstreetbets is acting like the modern day robinhood by taking money from the rich and passing it on to retail investors. In order to explain the whole phenomena, let me begin by explaining what a short squeeze is. I'll be using made up numbers here to make it easy to understand. Once you understand what a short squeeze is, you'll be able to see the whole picture a lot better. So, let's assume that Melvin Capital borrowed GameStop at $10 per share. If they do this 1,000 times, they'll end up with $10,000. At this point, they will also have $10,000 in debt, because the second you begin your short position, your cash position is equal to your debt position. So in this example, Melvin Capital will have $10,000 in cash and $10,000 in debt. Here's how these hedge funds make money. If GameStop does end up going down from $10 to let's say $5, Melvin Capital can buy those 1,000 shares at market value at $5 per share. So it now costs Melvin Capital $5,000 to buy those 1,000 shares, which means that Melvin Capital has now profited $5,000. Because remember, when you have $10,000 of cash and $10,000 of debt, it is your obligation to rebuy those shares at some point in the future. But because the value of your debt changes with the value of your stock, and the value of your debt when the stock goes down is now $5,000, you can make that trade and cash out $5,000 in profit. So now that we know how these hedge funds make money when they short stocks, let's take a look at what happens when Wallstreetbets starts to fight back against these short sellers. So now in the same scenario, let's imagine that GameStop goes up by $100 because all these people on Wallstreetbets start pouring money into GameStop. Well, now you have to buy 1,000 shares at $100, which is equal to $100,000. So remember, Melvin Capital had $10,000 in cash, but now they have a debt of $100,000, which means that Melvin Capital has a net loss of $90,000. And now at this point, Melvin Capital has to buy to cover the shares. This is when they start getting margin calls from their brokerage accounts. If they don't deposit that $90,000 difference, the broker will end up selling their other open positions in order to cover the short position. So this is what causes a short squeeze, because when the margin call comes in, all of a sudden these hedge funds get forced to cover their short positions, and what that means is that Melvin Capital now has to buy the GameStop shares at these newly elevated prices. I mean, GameStop went from $3 to now $350, which is insane. So obviously, given the situation I just explained, the debt can go way up at these hedge funds that were short on GameStop. And that is exactly what happened to Melvin Capital. They recently reported that they took a $2.7 billion cash injection just to survive, and they have to give up future revenue to the company that came in to rescue them. So basically, Wallstreetbets single-handedly destroyed a hedge fund, which could have only happened in this day and age. Citron Research also had to take a cash injection to stay afloat. Both of these hedge funds now have disclosed that they've closed all of their positions in GameStop. So now that you're aware of what's happened here in the last few days, let's explore what this means for the stock market as a whole. Since all the money is being directed into stocks like GameStop, AMC, money has come out of solid companies like Neo, Tesla, and Amazon. This means that solid companies that have good long-term potential will be on a discount in the next few days. In my opinion, this is a flash knockdown of the stock market, and that it will bounce back in a week or two at the max. So what am I doing personally? Well, I'm going to go shopping and hopefully grab some shares of these companies that I want to hold long term at a discount. Although I support the struggle against short sellers like Melvin Capital and Citron Research, I personally won't be investing in companies like GameStop and AMC, as I see these companies not as investment opportunities but rather as taking a stand against these short sellers, and I think the job has already been done. Anyways guys, that's it for today. I hope you enjoyed the video. If you did, please hit that thumbs up and subscribe to the channel. Have an awesome day and I'll see you in the next one.